Hey everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Today, the PPI data was released and it shows that's a cooling inflation, and the stocks generally performed straight. The US PPI recorded its biggest drop since April 2020 in October, further evidence of easing inflationary pressures. US retail sales also fell slightly in October, reinforcing expectations and raising the chances that the Fed will cut interest rates aggressively next year. The Congress is trying to avoid a government shutdown. Today, the Commerce Department reported that the PPI rose 1.3% in October from a year earlier, versus 1.9% last and 2.2% last, while PPI fell 0.5% in October versus 0.1% last and 0.5% last. The data shows that the U.S. Producer Price Index unexpectedly recorded its biggest drop in producer prices since April 2020 in October, providing further evidence that inflationary pressures are weakening across the economy. Compared with a year ago, the overall index rose 1.3%, while the core indicator had its smallest annual gain since the early 2021. A separate data from Commerce Department also shows that the retail sales fell 0.1% in October from the previous month, compared with a 0.3% decline and 0.7% rise previously. U.S. retail sales in October was $704.954 billion, compared with $704.881 billion previously. Excluding food and energy, core retail sales in October were $570.923 billion, compared with $569.655 billion previously. Economists saw a small drop in the U.S. retail sales in October, reinforcing the expectation that the Fed has already successfully cooled down the economy, and thus will stop raising interest rates. Retail sales, which fell in October after months of strong growth, suggest that the slowing demand and could further reinforce expectations that the Fed will stop or completely stop raising interest rates. Retail sales fell 0.1% last month, based on the expectations of a 0.3% decline. It also suggests that consumers are feeling the impact of rising inflation, and most low-income households relies on credit card to cover their purchases after using up excess savings accumulated during the pandemic. In addition, manufacturing index climbed nearly 14 points to 9.1 from negative 4.6 last month, the highest level since April, the data showed. About a third of respondents say that the economic conditions have improved this month, while a quarter said it had deteriorated. The report, combined with slow employment and wage growth, has led economists to conclude that the Fed's current rate hike cycle is over and that the Fed's interest rate could come aggressively next year. Markets seem to have seen this week's positive economic data as a clear signal that the Fed will start cutting interest rates sharply next year. Recent data shows that consumer and wholesale inflation has fallen sharply from their mid-2022 peak, sending traders to a frenzy. But Fed President Charles Daly warned on Wednesday that the Fed's credibility could endanger if it declared victory against inflation too early and then had to raise interest rates again. She also took a similar stance as President Jerome Powell, that the Fed may be more cautious towards rising inflation and making sure that the inflation has completely with control. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.